Thanks for joining me on my market report. My name is Mike. If you're new to my channel, you'll find out that we create these videos on a daily basis for mortgage rates. What we like to do is give you the information, what's impacting mortgage rates on a daily basis, whether it might be something from economic data that got released that day or some headline news that popped up that might be affecting rates, or sometimes the sentiment on Wall Street don't really seem to make sense, and we kind of give you the background of what investors are thinking and why it may not make sense on the outside. Sometimes it's like good news becomes bad news for investors and vice versa. So we're here to kind of explain that to you guys. A little bit about myself is I am a loan officer. I do work with the national lender. If we may answer any questions for you guys, please feel free to reach out to us. We're here to help you guys, whether it might be something in regards to mortgage rates or mortgage programs that might be available out there. We love to be able to earn your business too, so please run by any scenarios so that we can help you guys. If you're looking to get pre-approved to buy a property, we're here to help you get that pre-approval and help you finance that property. As well as, again, with refinances, we can certainly run numbers to see what may make sense for you. So please feel free to reach out. So without further ado, I'm going to jump on a different screen because the economic calendar is very large today. We have a short week this week, and everything that would have been spread out like over Thursday, Friday got condensed into today's. So again, we don't really look too much at the mortgage MBA's mortgage application, but I do kind of like to kind of point it out that we did see purchase and refinances both rise last week, which is good news. We saw increase of mortgage loan application. This is released by the MBA, Mortgage Bankers Association. Now we come down here, we got the October building permits that were released. So previous month, September, had 1.65 million seasonally adjusted units, and it dipped and increased slightly to 1.653 million. Now we also got the GDP for the Q3. This is the second look at it. So initially came out for Q3 at 2%. Forecast was supposed to be uptick to 2.2. It came in at 2.1. So it did go up slightly, but it's not quite at what forecast was calling for. We also had durable goods. The previous month of September, it dropped by 0.3%. Forecast is supposed to be showing an increase of 0.2%. However, it dropped, continued that trend downwards of 0.5%. Now, if you take out big ticket items like that, the previous month in September, it went up 0.5%. Forecast called for 0.5%, and it continued that same trend at 0.5%. So it's big ticket items that are like airlines orders and stuff like that. That's what's bringing these numbers down. So they're big. You got these big numbers. They can kind of really obscure the numbers a bit, and that's what's kind of really going into it. So durable goods are basically goods that are at least 3 years out. So you got your like washing machines and dryers, stuff like that are included with these. And we did show a nice improvement on that. It's just airplane orders basically is what brought the overall number down. Now we also got, let's see, look down here a little bit further. We got initial jobless claims. So last week we had 268,000 people apply for unemployment for first-time benefits. Supposed to be a slight downward turn at 260, and it really dropped. Now first time we've been under 200,000 at 199,000 people applying for unemployment. So a very good number right there. That's showing good signs right there. And continued is also coming down. So we see 2.08 down to 2.049, which is good news. Now, personal income is something we all like. We had a drop back in September, a drop of 1%. Our forecast calling for 0.2%, and it came up 0.5%. So people are making a little bit more money, which is good news. However, if you look at the other side of thing, consumer spending, let me see. Actually, I think that was a different number. Actually, consumer spending, excuse me. That was a different number there. Went up 0.6% back in September, and forecast gone for 1%, and it exceeded that to 1.3%. So good overall number there that people are spending. Not only making more money, but spending more money. However, if you look at it this way, they're spending more money than they're making, most likely. We also got PCE, which is the Fed's favorite gauge for inflation. They actually look at the core PCE, which is when you strip out food and energy. But we'll take a look at the headline. And the year over year on that one went from 4.4% up to 5% in October. So September was much lower. So we saw a big spike. We saw that in the CPI, which the markets reacted pretty negatively. And then if you look at the month over month, it went from 0.3% increase in September to 0.6% in October. Now here's the core month over month. We went 0.2% in September, 0.4% being forecasted coming in expectations, and then here's what the Fed will look at for real inflation. It went from 3.6 to 4.1%. So right now we're at, according to the Fed, at 4.1% real inflation here. So this is what the Fed will be looking at. That's a 0.5% increase, and of course the Fed won't like that very much. Now, let's take a look at new home sales. We had 800,000. This actually got revised lower down to I think I want to say like 740,000. On the other one, unfortunately, this one doesn't show any revisions, so this one was actually revised a little bit lower. We'll take a quick peek at that just to make sure, so that way you can kind of down, yeah, from 800 to 742,000, and it came in at 745,000. So we have 745,000. So it shows an upward trajectory, but however, it was revised pretty severely from the previous month, from 800,000 to 742,000. Now, consumer sentiment, we had 66.8 back in October, and 66.9 is per, a slight uptick, and it went up to 67.4. So people are feeling a little bit better overall in November for the month for consumer sentiment here. Then we come down to, let's see here, we got consumer sentiment, new home sales, the percentage, we got that, petroleum. So we have building permits in there somewhere too. I was just trying to see if I can find the building permits on there. Sorry about that. Building permits. Okay, here we go. Oh, we did already talk about building permits. My apologies. And pretty soon here, we're going to be getting the FOMC minutes. Right now, it's about 11 o'clock, and this should be released about now. FOMC minutes. This could have a market mover. One of the headline news was that Mary Daly, the Fed member out of San Francisco, basically kind of hit some lines that if inflation keeps persisting, which we're seeing right now, and jobs keep coming down and we're showing improvement in jobs, that they might start tapering faster than expected. So they could increase their pace of the tapering. And this FOMC minutes may show more reflection of that. So this is something that she mentioned ahead of this release of the FOMC minutes. The investors will be looking at this FOMC minutes pretty heavily just to make sure to get their sentiment. They want to gauge as to their thoughts about where what's going to take to start hiking rates, as well as, of course, the pace of the tapering. And right now, it looks like it's possible if this inflationary data still keeps going up, we could see a rise in increased pace of that. So as you can see here, we were just down 11 basis points, and while we're going over that, it just dropped down 16 basis points. So we may have got more. We may be getting a little bit more of a, as we said, this is just in the time period of when the FOMC minutes are being released. So as the FOMC minutes being released, we're kind of dropping a little bit further. And see, MBS at new lows as markets sift through the minutes. So the minutes aren't looking too good for the markets right now. So we're dropping a little bit further as we speak. All right, so that was one of the headline news. Let's take a quick look here at the Treasuries. So again, we're down about 14 basis points. Rates continue to worsen this week, as we see. We have a pretty big drop over here, especially from Monday on down. Monday was down 41 basis points because it dropped from like here down to here. And we got these other basis points keep dropping. So mortgage rates continue to drop. Here's the day where it dropped. We're improved a little bit and continue to drop again a little bit. So this is kind of like what it looks like today. How it's moving today. And then here's the Treasuries. Treasuries actually weren't doing as bad. They were way up. They did touch off of 169 earlier today. Right now they're down just under 1.66. Earlier it was down to about 165. But it looks like it could be worsening as well from the results of the FOMC minutes while they're reviewing those. So we'll have to wait by end of the day, see what transpires, see what they come through. But right now, as you can see, they're bracing for the worst as a possibility. So again, mortgage rates a little bit worse today. So here's the national average for conforming limits: 3.28 on a 30-year fix and 2.65 on a 15-year fix. So these again are average rates via conforming loan limits, and they do have points built into them. So talk about rates is that a lot of things go into a rate. So if you're talking to a friend, family member, whoever, there could be you could see different rate quotes per person. A lot of that has to do with from FICO scores to uh, if it's a purchase or refinance or cash out refinance, for example. If it's like an occupancy, whether if it's a primary residence, second home, or investment property, it could be also uh, the type of property. If it's a single unit, a single family, or a condo, to condo, which would be the same as a townhouse, to if it's a 2 to 4 unit property as well. And then of course amount of down payment or equity in the property. Those are variables that all go into determining what the rate will be for any given thing. So that's why it's always best to talk to a loan officer, see what rate that they can get for you, and not really compare it because there's really no one size fits all out there. So just give you a heads up out there. All right, folks, if you guys got any questions or anything we can help you guys out with, please feel free to reach out. We're here to assist you guys. About the rest of this week, we got Thanksgiving tomorrow, so the markets will be closed. And then Friday was basically half day, but I won't be doing reports on Thursday or Friday. So next time I see you guys will be on Monday. I hope you guys have a good, safe holiday. I hope you guys enjoy yourselves and have a wonderful time. And thanks so much for watching. And if you guys like these videos, please smash that like button. It helps us out, helps the channel out. We greatly appreciate you guys, and look forward to see you guys on Monday. Take care. Bye-bye.